Hello, good morning to all.
Hello, good
Can
morning.
you all
Good
hear
morning.
me?
Yeah, we can
Yeah,
hear you. Good morning.
Yes,
yeah, yeah, yeah. Uh, okay, I think now all set to start with the first lesson. Uh, I'm really new to this app. That's why it took little time, little bit late me to start because of just first checking everything. So I warmly welcome all the students for the course of central banking. This is actually our first lesson today. So I will first show you the course content. Here, there is the course content that you can see. We have to cover basically 11 topics. Today we are going to discuss about the first topic, but these topics sometimes you can see some misguide of a thing, because as an example, when we go to the second and third topic, that we have probably we have to discuss both of these topics together, like that. And I hope all the students can hear me now. Can anyone please respond to me? Purnima, are you there? Okay. So,
Yes, ma'am, I'm there.
right. Okay. Okay. Just to check whether you all can hear me properly, and you can. I hope that you all can see the presentation as well. And I think IBSL have already provided the presentation, or it is available in the portal or the website that you can download the materials. Okay. So now you all know what we are going to discuss during this course. This is basically about the central banking. We are first discuss about the central bank. What is it? What is their basic function? Then how it is important to the economy, and how it is facilitate the economy to run, and it's a smooth function, like that. And also central bank, the subject is a vast discipline that have been developed, still evolving, and there are so many criticism whether central bank should be independent or not, like that. There are so many things that we can discuss during this course. Okay, so as I said you, the first topic that we are going to cover today is the origin of central banking and its evolution. So we are going to discuss uh, how it begins, and then how it is developed, step by step, how it has been developed. And the next session, I'm going to introduce you the central banking function basically, and also what are the responsibilities entrusted with the central bank. And then we are going to discuss in detail what are the function. And when it comes to the fifth topic, that we are going to more focus on the Central Bank of Sri Lanka, because you all are supposed to work in work in the financial sector in Sri Lanka, so you all should know uh, what is the legal provisions available for the Central Bank of Sri Lanka to operate. And also then we are going to discuss the operational structure of the Central Bank of Sri Lanka. But by discussing the operational structure, that we can see what kind of a structure that other central banks around the world also have, because you know that when we are going to start the discussion, we can see what are the main objectives. Basically, the objectives or the main objectives of central banks are quite similar among all the central bank around the world. Today also we are going to discuss some of this common uh, common state of it, and then the impact, right? How each and every operations of the central bank is important, and also how they can make an impact on the economic activities. And then, as I said you, that about the independence of the Sri Lanka, that we are going to discuss. And then we are discuss about there are some leading central banks around the world. You know that uh, as an example, Fed Reserve is one of the leading or the apex institution. When we get all the central banks around the world, that we are giving some that specific importance to the Fed reserves. Why it is? Because that the economy is more, Fed reserve is in USA. So we all know that USA economy, it has an impact. uh, Whatever the decision that Fed Reserve takes, it can be an spillover effect even for a little country like Sri Lanka, because of their the links in between the investments and trade, and also the interest and all. I hope that you may have at least a kind of a that low, even low level knowledge of the basic economic concepts. So when we are going to discuss about the topics here, I think you have covered most of the topics that we need to have as the background that you have learned in the first course before this course. So I hope that we can manage to understand all the concept. And what about the last topic here? It says contemporary trend and issues related to central bank. What are the contemporary trends? You know that suddenly what has happened, now we are facing a very specific and different kind of a scenario. We were never thought that we have to lock down like this in our era, but now we all are experiencing that global level, the pandemic, right? So it is kind of a disease crisis, right? Or the health crisis that all over the world, all over the economies are now experiencing. So the role of the central bank also, according to, we have to adjust our role, going beyond the traditional function and all that we have to facilitate, because the central bank, actually it is considered as the leading institutions or the leader of the monetary system of the country, right? It is all about relating to money and also the financial system. So when we are going to discuss about the responsibilities and function, you will get to know what I mean. But basically, you have heard about the central bank, and you know what is the important role that have to boost the economy. We have to always push the economy, because we have to ensure whether the economy is growing smoothly, right? So there is a very specific responsibility has been given to the central bank. So with that contemporary trends, if something happened, if there is something happen that could be an impact to the economic stability or the overall economic system, it matters to the central bank. So what the central bank has to do? Central bank has to uh, that adjust accordingly, and sometimes we have to go beyond the existing policy tools or sometimes the regulatory frameworks to facilitate or that rescue the economy, like now today there is like that many of the central bank around the world that uh, they have to take several measures to rebuild the economy, because you all know that how that current scenario had affected the overall economy and the financial system, like that. And also you may have heard about the digital currency or the cryptocurrency like bitcoins, and also about the blockchain technology. Those are the that very timely topics now today. Many of the people are talking about. And also I think as the first time in the history, the New Zealand Central Bank is also going to regulate this cryptocurrency. It is not actually the legal tender. It is a digital currency. We are going to discuss later. So now you can see that with the contemporary developments, that central bank role is changing. It is getting evolved. That's what we are going to discuss. Throughout the history, that we can see time to time, the role of the central bank or the responsibilities of the central bank has been changed accordingly. So the scenario today we are facing is kind of a very specific example that we can see. Okay, so moving forward, now we are going to start and discuss about the origin of the central bank, right? The story of central banking goes back at least to the 17th century. So it is the central banking, the subject or the concept, it has a long history now, right? So the Swedish, it is not the risk bank, right? It is Riksbank. Uh, it is Swedish. So it is considered as the first central bank in the world. At the beginning, actually, it was a private institution, right? It operated as a joint stock bank. There are many private stakeholders were there, which was established in 1668. Yeah, see here, but you know that it was a private entity, but it was started to lend the government funds. So one of their basic or the major responsibility was to lend the government funds. But it means that uh, today also, that you know that central bank in Sri Lanka, the Central Bank of Sri Lanka, also facilitating the government, right? Not only being a lender, but also facilitating, uh, that to raise funds. By We are going to discuss these things in detail later, but I'm just telling you that today also that we can see that function is there. So we are facilitating the government to raise funds, or that to the government to operate with their to operate in a smooth manner, that they need to raise funds, right? How the government can has, because there is a budget. No, you all know that the budget, there are several expenditures that government has. At the same times, government has some the key areas that they can increase their income, like tax. But sometimes, not sometimes, in case of Sri Lanka, always we can see that there is a budget deficit. What is budget deficit? That the government's income is lower than the expenditure. So how they are going to bridge this gap? So in that case, the central bank is uh, functioning as the agent to the government to helping to fill this gap, right? Like that, there are at that time also, early stage of the central bank also, that we can see that function was there to lend the government funds and to act as a clearing house for commerce. What is it? That there are some other banks or the financial institutions facilitating the transactions in the economy at that time also, but not maybe in a very complex manner like we can see today. But still there were some financial institutions or the banks that facilitate the people to do their transactions. So at that time, that because the one bank to other bank, like these transactions should be happen, because all the customers or all the economic entities in the economy are not going to serve by the same bank, or they are not going to keep their money in the same bank. When the big transactions are happening, that bank to bank has to do the bank to bank, they have to do their transaction among or the between banks on behalf of their customers. So in that process, there should be a mechanism that, or a particular place to help this uh, transactions. The same thing that today also we are doing. That as an example, the check clearing system, you know that, right? So you can deposit your check, right? Whatever the check that you are receiving, that you are going to deposit in your bank, but that check has been issued by another bank. So how this clearing thing happen? How the respective fund is coming to your bank? So like that, at that time also, there are several activities were happening like that among banks. So that one of the other than lending the government funds, one of the responsibility of the central bank was to facilitate those clearing, to act as a clearing house for commerce or the other banks, right? So afterwards, that we can see most of some other banks also started their operations, right? The very common or very important example is the Bank of England. right? So that that they've it is also again a private entity, right? uh, that what they did, purchase government debt. What they did, they purchase the government debt, mean what? Again, they are going to facilitate the government, right? The government debts, that they are going to purchase the government debt means that they are going to facilitate funding the government to do their operations, right? It is the another important step in this process. Other central banks were set up later in Europe for similar purposes, right? So in the Europe, that we can see that then the Bank of England was the first bank in the European uh, continent, right? Other banks were set up later in Europe for similar purposes, though some were established to deal with monetary matters. That the other banks also was established in the same way. In the England, there are some other countries in Europe, France and all, that they also start up with the central banking function, but basically they wanted to their main responsibility was to deal with money. Early central banks issue private note which serve as currency, and they often had a monopoly over such note issue. Here you can see that today also one of the key responsibility, a very specific responsibility that the central bank or the monetary authority has, is to issue currency. At that time also, that I said that these banks are like the private entities, so they could issue private notes. That means that now today we are using currency note and coins, that that they are not issued by any private entities, right? All over the country, all of the people, they use currency notes, right? They are not going to ask for something else instead of a currency note. They all accept that. We are going to discuss about these specific features of the currency when it comes to the role of issuing currency or the legal tender by the Central Bank of Sri Lanka, right? So these banks also at that time, they issue private notes to serve as currency. They are notes, not actually the currency note that we are seeing today, but specific notes that they could issue to serve the role of the currency, right? So, and to issuing this note, that they had that the sole power or the monopoly, that then only that central banks can only issue these private note, not any other entities can do that like that. Okay, so yeah, now we are going to discuss some more about the origin of the central banking. Yeah, but one of the basic functions of the central bank at that early stage was to help the government, fund requirement and all. But they also still, they were private entities, right? And also engaged in banking activities. That means sometimes, as I said you earlier, that they help the other banks to do their activities as well. And also you see that central bank, not like today, but they engage in banking activities means what? They have done some of the activities that commercial banks and the other development banks in Sri Lanka, what are the activities that they are doing today? They are taking deposit, lending money at individual basis. So at that time, the central bank or some of the central banks, they also did the same thing. That, but today we are just the central banks are bankers, the bank for the bankers or the government. That's it. We are not going to serve the customers or the people in the country at individual basis. There are several ways that we are facilitating the people, actually, that we are facilitating the economy, means that we are actually facilitating all the people or the nation in a country, right? But not at individual level. But at that time, we can say that central banks, they held deposits, right? From other they held the deposits from other banks as well. right? And also here you can see that save as bankers for bankers. Here today also we are doing that same function, facilitating transaction between banks or providing other banking services, right? So that's what they are, because they can even keep their reserves as well. When the other banks, they have some more liquidity or the more funds that they no need to meet their day-to-day transactions, so they can keep the money. So that the central bank, they are going to keep those the funds or the money as deposits, right? Yeah, see here there is a nice word, repository. It is like a safe poka dala තියෙනවා වගේ සල්ලි. So they become the repository for most banks in the banking system because of their large reserves and extensive network of correspondent banks. How they can facilitate to that? Because all the banks in the country, so they are having connection with this central bank. They all are linked with the central bank. So central bank is holding a very large reserve. So what the bank has the trust that the central bank is the place where they can keep their currency, or they can hold their deposits with the central bank. So it is like it become a repository. So that's why they are having a very the big portfolio of reserves at that sense. These factors allow them to become the lender of last resort in the face of a financial crisis. Yeah, there is another term that you have to learn here, lender of last resort. Now, see the functions that they were doing. In first place, they were lender to the government, and also we saw that they were bankers to the other banks. That means they function as a bank for the other bankers, and then they were the last resort, lender of last resort. What it means? Last resort, lender. So it means that when there is a crisis or a financial crisis, we know that banks are going to collapse sometimes, right? We can see that even today also there are some incidents that we have seen. So sometimes that bank, they cannot meet their liquidity requirement, or they may not able to balance their asset and liabilities. So in that case, that they are not in the position to meet their their responsibilities to their customers because of the lack of fund they have. So what will happen? The customers, what will happen from their perspective, that the bank cannot let to breach that trust that they have, that the customers have, right? Though they have to facilitate the customers on demand, right? When the customers deposit their money in the bank, in return, when they demand this money, that's in the banks, their responsibility is to give the facility for their customers to withdraw money. So they have to have enough funds to meet this requirement. But in case there were so many that events we could see during the history, that the banks, they met with financial crisis. At that time, as we discussed, that the central bank, it has a large reserves of fund, so they can rescue the bank, any bank, if they are going to be collapsed. So at that time the central bank can escape that, actually can help by giving them fund to reactivate their function. So that bank is not going to be collapsed. So the central bank, actually they are doing the role of rescue like that. So it also over there at that time. Provide emergency, they see here the emergency cash requirement. So provide emergency cash to their correspondents in times of financial distress. In case there were so many how these financial distress can come, we can see after the world war, and also sometimes it can happen because of destroying their harvest at a very large scale. like that. So in such scenarios that the banks also facing trouble because their customers, they cannot the funds are not coming to the system because no money actually. So there should be a way that the whole system to be run continuously. So at that time the central bank intervened to the problem, and they are transferring some reserves or the funds to the required banks. That's how they did. Okay, but in the later stage, that at the in the first time when they were doing that, the role of lender of last resort, actually they didn't think of its repercussions. Like that when there is a particular way to rescue you all the time, that you are not going to be safe in the future as well, right? It is a very common thing, no, in our life also, that we are not going to be responsible, or we are not going to think of our safety if always there is some way, someone to help us, right, giving their hands to come back to the normal situation. Then we are going to do the same thing again and again, maybe the bad thing or a risky thing. So later on the central bank identified that, right? Because that some of the banks, that they are not going to adhere to there is a particular way that all the banks should behave, nor otherwise they have always, there is a risk. So they have to follow some specific mechanism to minimize this risk. Otherwise always they have to uh, face the different crises. So there should be a mechanism that the bank should have in place, right, to encourage the banks to behave with a discipline, right, especially maintaining their assets and liquidities. What central bank did was, later on they were when they are going to play the role of lender of last resort, they ask some collateral from the banks. Like likewise, that they could create a penalty rate for this lending under the role of lender of last resort. So that's how they encourage bank to be disciplined, and also they have to have a, that they have to manage their risk. So that how that central bank influence the banking system to uh, operate in a particular manner, right? Okay, then okay, now we discuss about the origin of the banking. Now we are going to move forward to see how they were evaluate and how that transition happened. Transition means that they are going to change their status to the next level. Like the one important example here is the Fed Reserve System. Fed Reserve Bank, we say in the USA, it is the central bank, USA. So it is actually the first bank established in the second wave of central banks, right? Actually, in the 20th century, we discussed that the first stage of central banking was started in 17th century. When it comes to the 20th century, that we can say the second round of central banks are coming into play, and their functions and role are now at that stage, the second stage, it has been different than the first stage, right? These banks were created primarily to consolidate the various instruments that people were using for currency. What it means at that time, now we know that that the instrument that we are used as a currency is a very standard unit of account, right? It is the currency note and coins that issued by the Central Bank of Sri Lanka. But at that time in USA, we saw that in the first case that I said, there are the central banks were private entities, but they issued private notes, right? So these notes were considered as currency. But in some cases, there were different instruments that people use as currency. Not only the currency, note and coins, legal tender, but some notes, that promissory notes and all. There are some other instruments that they can use to do their day-to-day transaction. So the first reason that why these banks were created as central bank or the Fed Reserve System to consolidate means that they are going to use a standard one single instrument to use as currency, right? And to provide financial stability, and also were created to manage the gold standard. That gold standard actually come into play at that time, right? We are going to discuss a little bit more about the gold standard. So here, the first time now we are seeing the word of providing financial stability, right? So now the view of the central bank, right? Or the responsibility of the central bank, that we can see getting wider. So not only to issue currency, but also to provide financial stability, right? We are going to discuss about financial stability, price stability, economic stability, and all that we are going to discuss later one by one. But remember here that we see this word at the first time, this is the financial stability, and also the one single instrument to use as currency. These are the specific elements that we have to identify during the evolution of the central banking, and how their functions are going to be more specific step by step. And also were created to manage the gold standard. So gold standard is a particular manner that they manage their monetary system, which most countries gradually adhered. So this is the, in USA they started this system, and then gradually the other countries also adhere to this system, they also started to follow this gold standard system, right? Right. Now let's see what is the gold standard. Each country define its currency in term of a fixed weight of gold. So the gold is going to be a reserve, and they are going to that value their currency associated with the gold reserves that they have. Central banks held large gold reserves to ensure that their notes could be converted into gold. So what the central bank's objective then, they have to hold a large reserve of gold, and then only they can ensure that their notes could be converted into gold. Means that it is like the wealth of the nation then, as was required by their charters. So see, now that gold standard, to adhere with that system, they should have to have a charter. That means that legal background, right? So legal norm should be there. And when reserve decline because of a balance of payment deficits or adverse domestic circumstances, I'm not sure whether you have learned about the balance of payment, but balance of payment is how I can explain you the balance of payment. Yeah, balance of payment is, that after the Second World War, right? That all the economies were open to trade with the other countries. So we could see there are so many transactions among countries, the nations. So whatever the transactions happen between these countries are going to be recorded in a particular place, which is called the balance of payment. So whatever the transaction you are doing abroad, that with the abroad, beyond the national borders, that there is a particular way that you have to keep all the transaction in account. This is where you have the balance of payment. So in case that all the transactions now link with the funds in and out, right? Fund outflows and inflow. As an example, if you are going to import something, what will happen? You have to pay the other country. So what will happen? Fund outflow, right? In the same way that if you are going to export something, in return you are having some cash, right? The domestic producers. So what is it? capital or the funds inflow and outflows that we can see in case that our fund inflows, right? Inflows are greater than the outflow, we have a surplus, or the other way around. Okay, so in case there is a deficit, mean now that outflow is greater than the inflow, so there is a adverse impact to the country, because you know that actually we are paying that. I said that I said you that no, that we have the gold reserves, so it is like our national wealth, so we have to have a, large reserves of gold. In case that we are facing deficits, means that what, we are in trouble, right? So what we can do, anyhow we have to raise our the wealth or the gold reserves. So what the central bank could do, they would raise their discount rates, the interest rate at which they would lend money to the other banks, right? That interest rate, or at that time interest rate was not there, but the discount rate, doing so would raise interest rate more generally, which in turn attached foreign investment. What it means, it is the discount rate, so they are going to raise the discount rate, means that in the same way that it's happened today, foreign investment can come when there is a higher interest rate in the country. So what the central bank did, they raised the discount rates to attract foreign investment, thereby bringing more gold into the country. That means here in the earlier sentence, it says that the value of the notes could be converted into gold, right? See the third sentence, that it says, right, that their notes could be converted into gold. That means that we can increase the gold reserves that we have. This gold standard system, it was prevailed until 1914, right? Because there were so many, that drawbacks were there in this system, that gold standards, right? I think that in the next slide we can discuss. Central bank adhered to the gold standard rule of maintaining gold convertibility above all other considerations. What it means, that gold standard rule actually helped the central bank to maintain gold convertibility. That means that they can convert it into the currency notes and coins. Gold convertibility serves as the economy's nominal anchor. Here, it is a kind of a new concept maybe for you all. Nominal anchor means that, nominal means what? You know, that the value, right? There is a particular value of wealth in the country. In that sense, that central bank cannot issue currency to the public more than that. So there is a nominal anchor, means that it is always going to link with that the convertibility, gold convertibility, right? It was there. So the central bank cannot go beyond that. Always they have to issue currency notes according to the gold reserves that they have. Right, that is the amount of money banks could supply was constrained by the value of gold they held in reserves. That's what I said. And this in turn determined the prevailing price level. Right, now to understand this sentence, that you should know what is the link between the price level and the money supply. Okay, I'm going to just describe you a little. Hope that we will have a chance to discuss this in detail when we are going to discuss about the monetary policy, or one of the responsibility of the central bank to maintain price stability. I hope that we can discuss again in the upcoming one of the upcoming lectures. So anyway, just to give an idea about this sentence, I should tell you the price level and the money supply, there is a very strong link, right? So you know that how the price level can increase, because we assume that when we learn economy, that supply of goods or services is what? within a shorter period, we cannot just increase, right, supply of goods and services, right? So it is like a constant fact in that sense. When determine the price levels in the market, there are two forces: demand for goods and services, and the supply of goods and services, quantity of supply and demand, that you all know that it's a basic, the fundamentals of economics. So I have to just assume that you all are good at those fundamentals, right? Then only we can continue with our discussions. But anyway, time to time I will try my best to explain you the basic concepts as well. Otherwise, if someone is there that cannot understand the basic, that he or she will miss the whole picture, right? So yeah, so we were discuss about the price level, so prevailing price level. So how the determines the prevailing price level is the supply and demand forces. So the we are going to keep supply force aside, because normally we know that it is it is in the monetary system, it is going to be a exogenous factor. That means that the central bank, it has the power to control the monetary aspects of the economy, right, but not the real sector. So that it is come from the real sector. So we are going to keep it aside, because we are going to consider the supply factor as constant. So but the power that we have with the monetary policy or the monetary perspectives to change the demand aspect, right? So now we have to that when the supply is constant, how the prices can go up because of the higher demand, right? When the supply is fixed, when the demand for goods and services are increasing, what will happen? There are only few amount of goods and services in the economy, but more and more people are going to demand for goods and services. Automatically the prices will, there is a pressure for the prices to go up, right? Prices go up because of the higher demand. So what we can do is to reduce the demand. So how we can reduce the demand? Why we people demand? Because they have the purchasing power, or they have the capacity to buy something. If we can cut that capacity of the purchasing power of the people, where they are going to buy something, so we are going to make the money less available for the people. That means there is no more money for people to demand for goods and services. In that way, that we can control the demand side. So we can we can maintain the price levels low. That what it is about the price level and the money supply. So the money is actually supplied by the central bank, right? So it controls the level of money in the economy. There is a control over it by the central bank. So the amount of money banks could supply was constrained by the value of gold there. Now we are going to have a link with the gold standard. As I described you, when there is a gold reserves, that central bank is always to have it has a nominal anchor for that the gold value. So automatically it has a control over the supply of money, right? Because of that nominal anchor to the gold standard. So it is again determine the prevailing price levels. So that the price level was the third sentence now, right? Since the price level was tied to a non-commodity, right? Now we know that money supply is linked with the gold reserves that we have, right? So accordingly, there is a control over the money supply, right? In term the price levels. Now we can see the price level was tied to a non-commodity, was long run value of determined by market forces. I already described you everything. Long run value was determined by market forces. General price level, it is determined by the market forces, supply and demand. Expectation about the future price were tied to it as well. What is expectation about the future prices? It is another thing that impact on the price level. How? Because that at the time that we heard about this the corona virus, right? So people thought that we are going to be locked down, so there can be some issues, or there can be some shortages of goods and services. So what they try to do, they all run to the panic buying. We saw that it called the panic buying. So people went to buy all the stuff that they need to survive for about 3-4 months, right? Those were their expectation. But we didn't experience any kind of a shortage of goods and services in the market. They were there, but it's still people thought, they expect that all the goods and services are going to be run out. Because of that, there is no way that people can work, and the goods will not come into the market if the lockdown thing happens. So we have to store all the goods we need, like that. So all the commodity consuming good, that that the thing that we are consuming day to day, so people tend to uh, buy and store and keep them inside the household, right? This is kind of an expectation they had. Because of that, what happened, that what the sellers did, they increased the prices. So generally we saw that the price level increase was happened, and the government intervened, and the government that they force some limited or the caps, right, over the price levels, that how they controlled, like that. So now you can see, since the price levels was tied to the non-commodity whose long-term value was determined by the market forces, that means the demand and supply, other than two forces, the expectation about the future prices were tied it to the price level as well. In a sense, early central banks were strongly committed to price stability. So what we can say, because of this gold standard, which which was served as the economy's nominal anchor, so many of the early central bankers, they could committed strongly to the price stability, because uh, based on the gold reserves only, they could supply money. So in that sense, there was a control over the price level. So they could maintain the price stability. Price stability means what? There is no that fluctuation in a short term. There can be several fluctuation, but not a very big spikes, right? So that means that volatility, price volatility is low and stable. That the prices can be volatile, but it is very low, right? Low and stable, that is not going to prevail for a long time. Sometimes, that here also, some for the commodity goods that we know, time to time there are some price fluctuations. But currently, the central bank also, we could maintain the inflation at a mid single level. There are some fluctuation in between, but in the long term, that we can see that it is low and stable. So that what the objective, one core objective of the central bank, that we call that price stability. They did not worry about one of the modern goals of central banking. What are the modern goals, right? So in early stages, they were more concentrated on the price stability, but not concerned about other modern goals of the central bank. A stability of the real economy. What it means today, that when we take the Central Bank of Sri Lanka, our first, or the key first objective is economic and price stability. Not only the price stability, but we were focused on the economic stability as well, right? But at that time, many of that, today, not only the Central Bank of Sri Lanka, the other central banks or the monetary authorities, they also concerned not only about the price stability, but also the economic stability, right? We are going to discuss in the next lesson. That's in the second lesson. I think we will get a chance to discuss about these concepts in detail. So the modern, actually they just concentrated on the price stability, not about the stability of the real economy. Real economy means what? Real economy, there are several attributes are there in the real economy. What are they? the growth rate, unemployment, right? Employment rate, right? Employment other than the inflation, right? Because they were constrained by their obligation to adhere to gold standard. So by the charter, they were obligated to adhere to the gold standard. So they just concentrated on this thing, and also their focus was limited by this gold standard, right? They could not think of the modern goals or the economic stability of a country. That means that they are just concerned about the price stability, but not boost the overall economic activities of the country, or to decrease the unemployment rate and all. However, with the expansion of economic activities and trade, we can see after Second World War, the many of the countries, right, they opened their economies and they started to trade with other nations, even the developing countries, not only the developed countries, or not only the Europe or the USA, but all over the world, that we can see that there are so many trade relations evolved. So it was realized the difficulties and limitations associated with the gold standard for central bank to issue currency, and hence such conditions changed over time. Because very nice, very good example for this is that exchange rate, right? Actually, here the price stability, it was just concentrate on the price stability, domestic price stability. But when you are going to open to trade and all, you have to think about the exchange rate and all. So that gold standard, that mechanism is not going to be served further to achieve this overall goal, because now the most of the nations, they realize that other than that, there are so many other aspects that we have to have a control. So because over time, that their responsibilities, they understood that it has to be changed, right? So that's how that now the that evolution process is happening, and the responsibilities and the focus areas were getting expanded, right? Okay, now here, see, before 1914, central banks didn't attach get weight to the goal of maintaining the domestic, right? I said you in the earlier slide that we could see that the gold standard prevailed until 1914, right? So before 1914, central banks didn't attach great weight to the goal of maintaining the domestic economy's stability. So I would like to, that underline this sentence: domestic economy's stability. That means economic stability, right? So here the story that I've already discussed with you. What this changed over after World War One, when they began to be concerned about employment, real activity, and price level, right? So there are very close relationships among the unemployment and the inflation, right? So because there were so many theories evolved at the same time after World War One. So it is not actually, I mentioned it like World War Two. I'm extremely sorry. It was World War One, right? So after that, there were many economics theories were also evolved at the same time, because several countries, they experience several kind of uh, you know uh, sometimes very challenging situations that we're facing, right? The activities, the economic activities, and then their commerce and everything now getting changed. So with that, right, so the overall economy has to be facilitated in a very broad manner. That means not just only the price level, there are several other aspects that we have to be focused on. So being the monetary authority, the central bank, actually it has the power over the monetary policy. That means that monetary, what is monetary? The money related things. So these all the activities that the has the central bank is the uh, unit that to have the control of it. So many nations, they realize that other than the price stability, that there should be some policies or the facilitating role by the monetary authority to boost the economy. Real activity means actually the GDP growth, right? Basically, the GDP growth. You all know what is GDP, right? GDP is actually the growth rate or the level of the physical uh, value of real output that we say. Physical value of real output is the GDP, the value of the good and services produced by a nation during a particular period, right? This is a GDP. So GDP growth, unemployment, employment or the unemployment, employment rate, and the price level. In the long run, that in the macro, we can see there is a very specific type of relationship is there. When the growth is the GDP is growing, the price level, the general price levels also going to be increased, right? So you know that unemployment is also linked with that, right? So there is a tendency to create unemployment, to increase the unemployment with a higher GDP and the price levels. So that's why there should be some framework, okay? So or some kind of policy tools to control all over these together to boost the economy, not only concentrate on the price level, but there should be some kind of balance but more comprehensive approach to support the economy. That's how most central banks started to follow the same thing here. Then you know that we can see the central bank's the theme or the focus, right, is going to be expanded, right, by going through their mission or the vision statements that now we are going to study that. Okay, here I have taken some of the examples here, particularly some important or the leading central banks around the world at that time, to just see, right, what were their uh, key responsibilities like, right? Here the Riksbank of Sweden, right, is Sweden's central bank. It is the Sweden central bank and authority under the Riksdag, the parliament. You can here see that the central bank of Sweden is under the authority of the government or the parliament, right? The Riksbank is responsible for monetary policy with the objective to maintain price stability. We now know that many of the central bank, even from the beginning of their functions, that they were focused on the price stability. Actually, after 20th century, that we can see that. So it was there. One of the main objective was to maintain the price stability. The central bank has also been given the task to promote a safe and efficient payment system. There is another element now come into play, right? So what is it? Safe and efficient payment system. What is it? What is the payment system? Payment system is what? I will just give you an overall picture of the monetary and financial system, right? Monetary is basically referred to money, which is like a lubricant that facilitate all the transactions happen in the economy, right? So there are several transactions are happening. That's how the economy is, being activated, right? Otherwise, that one is producing something, another one is producing something, maybe good and services, but there should be a mechanism to exchange these all the good and services. You may have heard about the barter system, where we had no a common means of payment, that there was no currency or anything, or a very common or standard instrument to use as a currency. So at that time, you may have heard and learned about the hardships or the obstacle driven because of that system of barter. There was no standard instrument, right, to accepted by all the people, right? There were so many drawbacks were there. So compared to that, when you are having a common unit of currency, that you know that how it can facilitate the transactions, right? So it is actually monetary system is particularly referred to the money that the central bank is actually the monetary, they are controlling the monetary system. So the inflation and all that, stable money that we are going to discuss later, right? There are not only the supply of, actually it is basically the supply, the level of adequate optimal level of money should be there in the system. That's what the monetary system or the monetary means, that, right? The central bank is the apex institution in any nation that control the money supply. So what is the prime responsibility is to control the or the maintain price stability. How to provide optimal level of money to facilitate the transaction of the system. Optimal means that there is no excess or shortage. That means the money available in the system should be adequate enough to do their transactions. More than that level means higher demand, so the pressure to increase the price. Or when there is what will happen if there is a shortage? What will happen? If there is a shortage of money, there is no demand at all. So what will happen? No demand means that prices are getting lower and lower, and there is no incentive for the producers to produce. And what will happen? There is no that the producers, they are not willing to produce because of the lower prices, right? Because they always driven by the profit motive, all know that. So in that case, again, it is going to be affect the overall economic growth of the country. So that's why the monetary is something very important. Monetary system is a very important thing, that the overall responsibility is held with the central bank or the monetary authority of any nation. So other than that, how this money is going here and there. So when you may have learned about the financial system, so there is a financial system other than the monetary system in economy, that there should be a financial system to allocate these funds efficiently, right? We know that in a nation that there can be surplus unit and the deficit unit. So there should be a mechanism to channeling these funds among these economic agents. That's where the financial system, right, come into play. And then what is the safe, efficient payment system means? That in this financial system, there should be a mechanism for people to do their transactions efficiently, right, and safely. That is also there. In Sri Lanka also, there is a financial system. You all know that there are several, many financial institutions are there, right? So the banks, specialized banks, that commercial banks are there, specialized banks are there, and some financial institutions are there, few microfinance companies. There are several, so many microfinance companies, but the few regulated microfinance companies are there. So these all entities are there in the financial system. Between these entities, as we discussed earlier, the central bank, remember that in the few 2-3 slides that we discussed, the the way that central bank facilitate the other banks to do their transactions in between. Even the bank to bank, there should be a way that they can do their clearance, right? So check clearance, or maybe some other kind of way that they could uh, they have to have a facility to transfer money. So this is where the payment system, right? The payment system should be safe and efficient. And if it is not going to be safe, that people are not going to trust in it. So that will people are not going to use that tools or the mechanism. So there is no point of having that system, right? And also it should be efficient. Mean, now you may have heard about, as an example, then I'm telling that there are actually in Sri Lanka, the payment and settlement system is also regulated by the Central Bank of Sri Lanka, the same way that this in Sweden it happened, right? So there is a separate department in the Central Bank of Sri Lanka called Payment and Settlement System. And then there are some that there should be infrastructure. There is a separate structure of infrastructure is there. As an example, for check clearing system, there is a separate system established separately. Lanka Clear is one of the entity that take over this responsibility and operate in this regard. And central bank is giving guidance and regulate the system. And in addition to that, you may have heard that about the shift system is that there are different kind of real time RTGS system there, right? Real time payment system there. That's why how you can transfer your money from one account to another account online at the same time, and the same way that you can even transfer your money to a third party in another bank. The real time payment, right? You can make it into a real time payment because of that payment system available, which is regulated by the Central Bank of Sri Lanka. So these are the kind of payment infrastructure. So this should be there, that not only the infrastructure but also the legal framework to regulate that system. So this should be there. Otherwise, when you have money, if there is no mechanism you to do the payment in a very safe and efficient manner, people are not going to use the cash, right? And also the financial system also there, right? There are so many institutions to channel funds, right? This is the overall picture. That in that picture that we can see Sweden Bank, that their objective is not limited to maintain price stability, but also to promote a safe and efficient payment system. That's what discuss in this slide. Okay, let's move to the next slide and see about the Bundesbank. It is the German central bank, and you know that I have to tell one thing. There are so many regulatory measures or the policy frameworks that even at present that there is a very sound mechanisms, right, in the Bundesbank. So with respect to the financial system stability, you may have heard about the Basel 1, 2, 3. There is a regulatory frameworks introduced. So this is the one particular example. Even the central bank also sometimes follow anyway, we are following the Basel standards. Time to time, there are so many good practices that we can learn from the other banks. One of the example is this bank, like that. You know that central banks, there is a mechanism that there are some international level policy standard for the for central bank also to adhere with when they are, because you know that you may have heard about the International Monetary Fund and all, right? So likewise, that we have some international linkages, and also that we have to adhere to some international standard policy frameworks and all. So so we link with other central bank as well in exchanging experiences and for the peer learning activities and all. So Central Bank of Germany is one particular bank that very good example for other bankers also to follow some of the policy tools that they are using and the best practices, right? Let's see what is their mission statement or vision statement. The ultimate goal of all activities of the Federal Bank is to safeguard the stability of the general price level. Safeguard the stability. Now, again, it is the price stability. For this, through analysis, a long-term orientation and impartially towards individual interests are essential. When doing so, the central bank has to think about the long-term orientation. That means they are not going to take any short-term measures. They can make short-term measures, but it can the results should be that applicable for a long-term basis. That means that when you are going to do something, we have to think about the long-term impact of it, and impartially towards individual interest are essential. Though the central bank is not going to facilitate the nation by individual basis, but in overall that we have to think of the interest of the individual, of the nations, right? In this stabilization policy, the Bundesbank also relies on the support of the economic, fiscal, and wage policies. That how they are going to have a long-term orientation in their policy creation, and also to treat the individual interest. How they are going to support the economic, fiscal, and wage policies. Now you have to, I have to mention another concept, right? What is the fiscal policies, wage policies, and economic policies? What are those? Normally, central bank in Sri Lanka also, we normally discuss about the central bank as a independent institution. It should be independent when it comes to the monetary policy. In order to control the monetary system, that central bank should have that what actually expected by many of the expertise around the world, that the central bank should have that independency to control, to have a control over the monetary policy, right? The monetary policy is, now you know that basically it is the money supply, right? It is about the money supply. When it comes to the fiscal policy, I hope that you have heard that fiscal policies are the policies that implemented by the government, right? Wage policies also like that. Wage policies mean that even you can now, very recently I heard that there are laborers in the plantation sector, no? That tea plantation and all. In this the plantations, the government is going to impose a rule to fix the what is it, that not the maximum but the minimum wage per person is going to be 1,000 rupees. It's a kind of a wage policy, right? So that wage policies, it is very important, right? And also fiscal policies mean what? Fiscal policies, there are tax policies are there. Sometimes that the government can increase the tax rates, and also sometimes they can decrease the tax rate. At the same time, they may have taken a decision to increase the subsidies for the people, right? You remember that very recently, because of that COVID pandemic situation, that many of the people, they lose their jobs and all. And also they were so vulnerable that people were there in some social segments. We saw that they were so vulnerable to the pandemic situation. So what government did was they started to give 5,000 rupees per person per monthly basis, that they wanted to give that. It is a subsidy, like, right? It is one-way transactions. They are doing nothing. They are not going to involve in any activity, but they are going to pay by 5,000. So what will happen, right? In contrast, at that same time, that central bank also did several, that we also, the central bank also introduced several policy measures to help the people. At the same time, fiscal policy also uh, running on, right? So we know that that when the government is going to give subsidy or something, that it is again the supply of money, right, to the system, right? So see that in case that central bank needs to control the money supply, it has to have an optimal level, no? So central bank decide this is the optimal level. Now one particular level they decided this is the optimal level. At the same time, them if the fiscal policy is going to be expanded in a way that they are going to give subsidies or something, that what will happen in another way, that treasury or the government treasury, that they can pump money to the system. So that do you think that it is going to be a good policy? No, because why? That central bank from one side they are going to control over the money supply, but the government is going to increase the supply of money. Sometimes it can happen. That's why in this sentence it says that in its stabilization policy, the bank also relies on the support of economic, fiscal and wage policy. So that means that central bank is not just going to operate with their policies, but at the same time they are going to support the fiscal and wage policies as well. That means that this monetary policy and the fiscal policy are going to be integrated. That means when the central bank is going to operate their monetary policies, at the same time they are going to facilitate the fiscal policies as well by adjusting their policy measures. Or otherwise there can be some contrast in between, right? So always it should be there, right? The central bank, it supposed to be an independent institution, but at the same time it should facilitate the government fiscal policies, right? Normally the central bank is actually is the advisor to the government, right? In our case, in Sri Lanka, we considered as the advisor to the government as well, right? We are facilitating this government in many aspects, as well as we are the advisor. And there is a very very coordinate manner. There should be a very coordinated manner when they are going to implement these policies, because not only the monetary policy but the fiscal policy as well going to be impact on the overall activities or the progress of the economy, right? Participation in the euro system. Now I'm going to the second part of the statement. Participation in the euro system, the convergence of international financial markets and innovation in payment and provide financial stability policy of Bundesbank new challenges. Now you see that German is a one particular country in the European continent. So you may have heard about the European Union, the euro system, that they are going to use the same currency, right? Same unit of currency by all the European countries, right? So the convergence of international financial markets and innovation in payment and provide financial policy. Right now, in this euro system, right, they are going to use the same currency, and there is no barriers for within the region euro system, that they can move here and there. Not only the labor mobility but also goods and services and everything. Now there is a very free system are there in place. So it is a very new thing for that the German bank to provide financial stability policy of the book, because now there is a central bank in the Germany, and the euro system is the system, right? It's the system that it is like it is like a very leading central bank for all the other central bank in the region. right? Because of the euro system, now they are going to use the same monetary unit, right? So what will happen, that there is a one monetary authority, right? It is going to, their policy is going to be impact on all the other European countries. So Germany is one of the countries there. So now their role is going to be more challenging within the system, how they are going to maintain the financial stability there in the system. To meet these challenges, the Bundesbank has identified 5 areas of work as core business fields whose profile it is still intended to raise. What it means, that in this euro system, when they converge into the euro system, their role of the central bank of the Germany is more challenging, because that they understood that their focus to be more wide now. Accordingly, they have identified 5 areas of work, right? A stable money, a stable financial and monetary system, a stable banking sector, secure payments, secure cash. Now, I'm not going to discuss everything one by one at the moment, because in the next lecture, the second lecture, yes, yeah, probably in the second, yes. In the second lecture, now we are going to discuss each and every aspect of these elements or the areas in detail, because these all the elements that in the Central Bank of Sri Lanka also that we are focusing on, right? So we are going to, there are sometimes we may have two chance to discuss these core areas when we are going to discuss the responsibilities and functions of the central bank, right? So what is next? Next is the Federal Reserve System, Fed Reserve. It is very common to say Fed Reserve. It is in the United States of America. You may remember when we discuss about the evolution of the in 20th century, actually the Fed Reserve begins their operation. They begin. So the fundamental mission of the Fed Reserve System is to foster the stability, integrity, and efficiency of the nation's monetary, financial, and payment system in order to promote optimal macrofinance performance. See, here there are some terms that we have to focus on. They talk about 3 attributes, right? Stability, integrity, and efficiency. Stability is relating to the monetary system, as I mentioned in blue color at the bottom of the slide, and also integrity is referred to the financial system, and efficiency is in the payment system, right? So why they need to do this? Because to promote optimal macroeconomic performance. So here we should know what is macroeconomic performance. Already we discussed, other than the price stability, the macroeconomic performance means actually in overall it is the GDP growth. But to have a sustainable economic growth, that we know that monetary system should be help to stabilize the overall price level or maintain the price stability. And also the financial system, it also that integrity means that trust and all, right? People should have the trust on the financial system, or otherwise they are not going to do their transaction, right? So the financial should be facilitate all the financial needs to facilitate the transaction among the economic entities, and that's how it can help to produce more goods and services. Because of that, you know that the fundamental thing is the available of capital, right? Okay, so it should be there. So that integrity in the financial system is paramount. And the next thing is, we already discussed about the payment system, how it facilitates the financial system, and ultimately the overall economic activities, so it should be efficient. At the time that they need to have their fund to start a business, that they should have the funds, or otherwise, as a very simple example, if the farmer needs to start with doing his farming, to do his farm, he has to start farming, right? So now at the time it rain comes, that he needs the funds to start, right, to plant the seeds, right? So at that time he should have the money or the fund. So the financial system should be supported him to have that funds, or the payment system also should be there to facilitate to do it uh, without taking long time, right? So that integrity, efficiency, stability, these three words, that different attributes in different system. Monetary system or stability means that price stability. Financial system integrity means that in the first place, that people should have trust on the financial overall financial system. And the efficiency in the payment system means that they need to do the transactions without having any lapse and gaps, and also it should be safe, right? We discuss about this. And next, when it comes to the Bank of England, right? The Bank of England is the UK's central bank, United Kingdom central bank. Their mission is to deliver monetary and financial stability for the British people. Now, but there are two components are there: monetary and financial stability. The bank was established in 1694 to act as banker to the government. See, now we can see that most of the central banks in this era, they were started to facilitate the government, right? We are still owned by the government, but we set monetary policy independently. See, we discuss about the importance of conducting the monetary policy independently, right? We discuss why it is. We are still owned by the government. They said that they are owned by the government, right? But we set monetary policy independently. That's what it says, right? When we are going to discuss about the structure and the what it is, organizational structure of the central bank, that we are going to discuss, Central Bank of Sri Lanka, that we are going to discuss about the way that have been posted the governor and all. So now then at that time we can understand the way that we have the link with the government, that authority, power and all. Okay. Okay. So accordingly, now we can understand there are two policy focuses were there: monetary stability and financial stability. Central Bank of Sri Lanka, here, our case, right? Maintaining economic and price stability and financial stability to support sustainable growth through policy stimulus, advice, commitment, and excellence. This is our mission statement. What it says. Here, we are not just focused on the price stability, but also the economic and price stability. That means that we are not only going to be facilitate to stabilize the prices, but at the same time, we facilitate the economy to have sustainable growth as well, right? So we think about the consequences of the monetary policy to facilitate the other aspects of the economy as well. That's how we can maintain the economic stability. And the next basic objective, these are the two key objectives. There are some other objectives as well. These are the two key objectives: financial system stability, right? To support sustainable growth through policy stimulus, advice, commitment, and excellence. There are especially when it comes to the price stability, that we have the policy instruments, set of policy instruments are there under the monetary policy. And also at the times, as I already discussed with you, that there is a way that we can advise the relevant parties, right, or especially the government and other entities as well, and also the commitment that we have and the excellence, right. These are the these are the common aspects that we are focusing on, right. So by going through the mission and vision statements of several central banks, right, that we can see there are some common goals and responsibilities, right. And here some central banks that we saw that in overall that we saw that almost all the central banks are focusing on the price stability, right. So other than that, some banks, they mentioned about the financial system stability, and some were uh, focused on the payment and settlement system, its security and also efficiency, like that. But here basically we can say that almost all the banks, they were entrusted with the responsibility of maintaining the price level, right. And the most of them are handling these functions, right, to facilitate efficient allocation resources to foster sustainable growth for their nation to prosper, right. This is what the Central Bank of Sri Lanka's ultimate objective as well. We are facilitating to efficient allocation of resources to foster sustainable growth. What is sustainable growth? It is another concept that you should know. Sustainable means what? It should be a very long-term growth, right? We cannot tell when one country is going to be achieved. One country, they achieved a very high growth rate for a 3-4 years, and after that they are not going to perform at the same way. In that manner, we cannot say that the economy is going to be sustainable. Why? There is a long-term plan, right? There is a long-term plan or long-term policy framework that we need to perform well for a long time, or otherwise normally the country can achieve the economic growth or the economic development, but it is not going to be sustainable if they are not going to allocate or utilize their resources in an efficient manner. What it means that they can utilize all the resources at a particular point, and they are going to waste all the resources in the next production cycle, that there is no resources for them to produce anything. So there should be a way that that they can allocate their resources in a very efficient way, in a very particular manner. At the same time, they have to focus on the social and environmental aspects as well. Then only the nation can be prosper for a long-term basis. Otherwise, it is going to be a very very fast and short-term thing, right? Price stability and financial system stability, along with an efficient and reliable payment and settlement system, is paramount for economic agents to use and allocate their resources efficiently with feasible plans according to their expectation, and to execute the plans with confidence. In this sentence, that we are cover all the aspects, right, that have to be covered by the central bank responsibilities, right? So these are basically the things that we should have, that should ensure by the central bank, right? That central bank, the objective should be cover these aspects, right? Basically, the price stability and financial system stability. I think I better mention something more about the financial system stability. As I said that in the financial system, it is not the same, right? The monetary system and the financial system, that they always link together, but two different concepts, right? That I discussed, I told you that monetary system uh, is the basically the it is referred to the money supply, right? So the financial system is the system facilitate this monetary unit to help or the facilitate people to transact to you using this monetary base, right? That monetary is there, monetary is the money. So by using the money, that people do transactions within the financial system is like the platform that facilitate all this transaction in the financial system. We can see there are different type of financial institutions are there. uh, there are several different kind of different set of financial institutions, right? The commercial banks are there, licensed bank, licensed commercial banks, licensed specialized banks. If you like to know about these entities more, you can just Google and see what are the difference in between. And also I think in some of the other core subjects that you are taking under this the diploma, that you are going to cover almost all the aspects, right? And sometimes you may have already learned about the financial system, so I'm not going to describe more. But in the financial system, you should know the entities that we have, right? The financial institutions are there, that there should be a payment system. Actually, the payment and settlement system is a one element should be there in the financial system, and the central bank is going to be there in the system as the regulator, right? Other than the monetary to play that as the regulator in the monetary system, the central bank is the regulator of the financial system as well, right? So these are the entities in the financial system. So what you should know what is the role of the financial institutions, right? And financial markets also there, not only the financial institutions that call this the commercial banks and all, the financial markets are also there, right? So all the entities are directly or indirectly controlled by the central bank. Okay, so at the same time, there is a strong link with the monetary policy as well, right? This is not the subject that we can discuss everything, but I'm just telling you that if you have this have the understanding about the linkages between the monetary system and financial system, that it is very easy to understand the concept that we are going to discuss in this lesson. If you cannot understand, you should tell me, right? Or otherwise, that when I'm telling something that you don't know really what it is, don't be panic. Okay, right? And the way that we are, because the way now we are conducting the lecture, I know that there is a very limited opportunities that I have to interact with you all. But I think anything that you cannot understand, you can just disturb and ask me if you really need to have a more explanation on any of the concept that we are discussing during the lectures. Okay, so we were discussing about the financial system stability. So what is financial system stability? Means that uh, the people, they should have the trust about the overall financial system or the institution plays in the system. In case that people is going to lose the trust, mean even about the one single financial institution, it is going to be badly impact to the overall system because of the very strong linkage or the interaction in between these financial institutions. So that's why we always the central bank of the one of the responsibility of the central bank is to regulate these financial institution as well as to supervise them to just check whether they are adhering to all the guidelines issued by the central bank as the regulator, because the central bank need to ensure that any one of the institution in the system is not going to collapse. In case one bank or the institution is going to collapse, mean there is a very strong impact for the other banks or the overall system, because of the very interrelationship, very strong interrelationship between this system, right? So that's why always the central bank is supervising the banks. So that's how the central bank is going to keep that stability or the maintain the financial stability by guiding them, by supervising them, regulating them, right? And this is the second aspect. But price stability and the financial system is stability is not enough. At the same time, the system should be facilitated with a payment and settlement system. Very efficient payment and settlement system should be there, right? So time to time that we know that with technical innovations, now we know that the way that we can do the payments are not like the same that we had or did our payments before 10-20 years ago. Now we can pay online. These days that we are discussing about the mobile payments, QR codes, everything, e-wallets, e-money. There are so many new concepts are coming up with the technological innovations, right? It is very rapid changes that we can see. So that the any of the payment or settlement system in a particular country, so it should be the capacity to facilitate these payment and settlements, but not all the systems in place, because you know that sometimes there are some payment systems are there are some illegal systems are in place. So one of the responsibility of the central bank to identify these as also to put some barriers. Otherwise, it can be a threat to the price stability as well as the integrity of the financial system stability as well. So always when we're going to talk about the price stability, it, we have to keep the price level stable. When it comes to the financial system, it is basically about the integrity, right? And also the efficient and safe. With respect to the payment and settlement, it should be efficient and safe. That's what central bank should ensure all the time, right? These all elements are paramount for economic agents to use and allocate their resources efficiently with feasible plan according to their expectation. A very little long sentence, right? But I'm telling you, economic agents. Economic agents are, who are the economic agents? Basically, there are households are there, right? Business entities are there. They are the entrepreneurs, right? So likewise, that we can see that some people, they need money, but they don't have money. Some people, they have money, but they should have a mechanism to invest this money, because when someone have excess money, that there should be a way that they can't keep all the money with them. They probably they're willing to save money and have some return. With respect to money, what is the return that you can have is the interest rate. So there should be a mechanism that people can use, or the channel the funds from deficits units, from surplus unit to the deficits unit. So this is basically the allocating of resources, right? It can be actually done by a proper system, financial system, right? Then only it is going to be efficient, or otherwise there is no kind of a system that there is no financial institutions back or anything, that it is very difficult for us to allocate fund or the resources efficiently. So it should be there to facilitate economic agents, or otherwise that business entities, they always know enough the seeding capital to start with their businesses, or to expand their businesses or the production. So they need to have, they need to raise funds, but how? Right, there should be a system, that financial system should be there, financial markets should be there, not only the banks and all, but the even through the financial markets they can raise funds, right? So likewise that they can do that. This system should be efficient to allocate the resources, right, in a particular manner. Then only they can plan, right? Even the consumers, that they can plan their consumption patterns, and also the business entities, that they can plan their production uh, process according to the way that they can have the resources, right? Then only they are going to have a plan, and also they are going to execute that plan. Otherwise, because they have to predict the future, right? Very simple example is that we are running out of the time, that but I have to tell, otherwise you don't know what this sentence means, right? So that let's say then the one single the individual consumer is there, right? So now he has some income, no, he has income. So the way that he is going to allocate these resources or the income that he has, it depends on basically his consumption needs, right? First he has to think about uh, how much of money that I have to allocate for my consumptions. So in case that there is no price stability, he cannot predict the future. If there is a higher inflation, that he doesn't know whether he needs to keep money, right? How much of money I have to keep with me to meet the entire expenditure in this month, right? If there is a high inflation, but in the current system in place in Sri Lanka, now we know that we have a very there is no high inflation at the moment, that we are maintaining it a particular level. So we know that within the next week it is not going to be a very high price. There are some volatilities, but we can even predict how much of money we need to meet our consumption requirement, right? So accordingly I can keep some amount of money in hand to do the consumption expenditures, and also I know what is the interest rate, so I can keep money in the bank, some savings in the bank, like that I can plan. In the same way, the producers, that also they also need to have that they also predict the future, and they also drive according to their expectation. They will see the way that market is moved. The system, when the systems are stability, that price stability and the system stability is there, only they can uh, expect something, and they can predict something, and accordingly they can make the plan and execute the plans with the confidence. If there is no confidence, that they are not going to, they may have plans, but they are not going to execute the plans, because there is no confidence what will happen in the next day, right? So because of this, that the prevailing health crisis is one good example, that you have to understand the way that the people are going to lose the confidence, right? Nowadays, that we know that no one is going to start a new business, because they know that pandemic situation, they don't know where it is going to be end up, right? Whether we can control it, uh, or whether it is going to prevail for a long time. So there is an uncertainty there. So when there is something uncertain, that likewise, that even we need some money to meet our day-to-day requirements, right? But with this pandemic, that people like to keep some more money to keep them more that comfortable. Otherwise there is we just passed the time that we even don't like to keep the money in the bank, because we don't know whether we can move out and have the access to cash. We can just do the transactions through the payment and settlement or online or something, but we didn't know that at that time whether we can go outside to withdraw cash, because at the time it came to Sri Lanka, the pandemic, that people got shocked, At that time, we saw that all the economic activities went frozen, right? So many of the factories, they just stopped producing anything, right? Then it was really difficult to start up with again, right? Because of the lack of confidence the people have, the way that the situation is move forward. Still that we are having kind of uncertainty there. So we can see how it is going to be affected the overall economic growth of the country. That's why this is a very nice example or the experience that you are having today to understand the importance of having the stability in those system, price stability and financial system stability. When the stability is not there, that means that uncertainty is high, so the people are not going to execute their plans. So when they are not going to execute their plans, mean that the overall economy is going to be stagnated. Because why? The people are not going to demand foods, or sometimes producers are not going to produce more and more good. See that we even don't know what will happen the next moment, that people are not going to spend money like the past years, because we don't know what will happen, whether we are going to have the income in the way that we are having today. We don't know what will happen in the next moment, so we are not going to spend much. We are just going to satisfy with the basic requirement. In that sense, there is no demand for good and services. There is no higher demand. So no higher demand means there is no motive for the producers to produce more and more good and services. So the overall economy is going to be stagnated, right? Right? We are not going to have a very that very higher growth we are going to experience at the moment. Also, almost all the nations around the world now we are experiencing that situation. That's why even without that pandemic thing, it can happen if there is no stability in the monetary system or the financial system. The same thing can happen if the people cannot predict the future, right? Okay. Now, the next thing is central banks perform other functions in addition to maintain central banking function to facilitate government operations and providing technical supports and policy advisors for economic management, right? That's what it says. I already told you that other than these two, then here we saw that with respect to the Central Bank of Sri Lanka, we saw there were two the major objectives were there: economic and price stability, financial system stability. But other than that, I said at the same time that there are so many other functions that we are doing, right, to facilitate the government, right, as an agent to the government. And also we are providing some technical support and policy guidance and advices for the economic the management, right? Not sometimes it may not just to the government, but also some other agents in the economy, right? Likewise, that central bank's role today is uh, very wide, right? So week by week, we are going to explore different segments or the areas of the central banking. So I think this subject is going to be a very interesting one, because the central bank that you are going to be there, you are the prospective bankers one day. Uh, I hope so, and that then you are going to serve in the financial system anywhere there. And the central bank role is to regulate the monetary system and the financial system. So you should know what is the role of the central bank and what are the function and all, because there are so many way that the central bank can have impact on the overall system. So maybe the job functions that you are going to take up one day. So you should know clearly what are the responsibilities and function, and how these function and responsibilities are going to be impact on the overall system of the economy. Okay, that's what we expected to learn during this course. Okay, so this is what I wanted to discuss with you today. And in the second lecture, it is I'm going to give an introduction to the central banking. So what is central banking? Why central bank is important? Responsibilities of a central bank. Sometimes we may have to discuss more than this. Okay, depending it depends on the time and the facts that we have to focus on. Okay, I would like to give you a chance to you now. If you have any question or need further clarification, now you can ask. Or any feedback, if you want to give me, then now you can talk. Anyone would like to talk a bit to motivate me? Hmm? Or otherwise, the way that I discuss the things today, I'm going to continue in the same way. If you want me to elaborate on the any concept, that you have to tell me that you need to be more elaborate on this. If you can't understand, you have to tell me. Or the way, if you're satisfied with the way that I conduct the session, even you have to tell me that it is all fine. Oh, are there anyone like to talk? Or otherwise, I can call name and ask you to tell me something. Oh, are there anyone like to talk? Or otherwise, I can call name and ask you to tell me something. Huh? Do you like to talk? Okay. It seems there is no any feedback. That means that either. Oh, thank you. One said that thank you, everything was clear, but it doesn't mean that all of you understand everything. I can understand, but even when you don't like to talk the same way that one particular student did, that even you can just type or in the chat box that you can just send me the message that anything that you need to know something more or need any more clarifications. So I'm again asking you, if please tell me if you need any further clarification on the concepts or the topic that I discussed today. Right, okay, thank you. Yeah, it seems that you are all fine with the things that we discussed today. Actually, we didn't discuss more technical things today. I just wanted to give a brief introduction to the way that the central bank or the central banking, the process evolved. Now, today we discuss about the history of the central banking process, and also we discuss about how the responsibilities or the focus areas were evolved, right? So because we have to understand one thing, uh, I discuss with you some of the major areas or the focus areas of the central banking today. But this is not guaranteed that we are going to focus on the same thing. The basic objectives, that price stability and financial stability, it will be there. But in addition, there can be many other responsibilities, right? We are going to discuss some of some of the key responsibilities. Other than that, in the future also there can be some more and more responsibilities come under the purview of the central bank. It depends on the situation or the events happening, right? Okay, I think the time is up, so we can stop the today lesson here. Thank you so much for all of you. Thank you. So we are going to meet again on coming Saturday at the same time, and we can discuss more about the subject. Thank you so much. Thank you. Have a good time to you all. Thank you.